Hello, everyone, and welcome to the DashCast, where we go about trying to find the most interesting people in the world of crypto, finance, and business. On this episode of the podcast, we were fortunate enough to have Dr. Prash, the co-founder of Caleb and Brown, onto the Data Dash channel yet again. Together, we spent some time talking about not only the current state of the market, but also what's going on in his specialty, the OTC space, and also got some perspective as to what might be going on in the overall market with the recent sell-off. Our sponsor for this podcast is the Dash Report. For those of you out there who like to keep active with the daily updates here on our channel, you might be interested to know that we recently launched our new newsletter. In the newsletter, we cover a variety of markets such as crypto, equities, forex, and commodities. It not only provides a great macro view on all different types of markets, but it also provides in-depth analysis such as market sentiment review, as well as looking at upcoming trends in each space and trading tips. So if you guys are interested, the link is down below.
What's going on, everyone? Hope you all are having a great day. Today here on the DashCast, we have a very special guest who we've previously had on the channel before discussing OTC markets. Today, I'm very privileged to have Dr. Prash. Dr. Prash, thank you for coming back on to the channel to talk about crypto and OTC in general.
Morning, Nick. It's good to be back. It's been a while.
Yeah, no, I'm still like trying to adjust and stuff, seeing as you're all the way in Australia, I'm here in the US and stuff when you're talking about morning and everything like that. So it's crazy how global crypto is in that sense. But anyways, I'm very happy to have you back on. I think it's a very fitting time to have you on because you're someone who's not only very knowledgeable generally on cryptocurrency markets, but also specifically in the OTC space. And I think all of us right now realize just the amount of craziness going on in crypto. So I definitely want to get your take on the OTC space, talk a little bit about OTC markets just in case as well for those who might not know about it. But one note I do want to actually add as well, I'd recently heard you got an award as of recent as a young executive in Australia. So I want to give you a quick congrats for that. Definitely try to keep up with what Caleb and Brown is up to. You guys have done a lot of great work in the space. And just first off, as always, congrats on that.
Thanks, Nick. Thank you. It's much appreciated.
Yeah, so I mean, to start off, I think, like I was saying, it would probably be best if we focus in on kind of what's going on in the OTC space right now, because right now, we as average everyday traders, for the most part, most retail investors, we see what's happening on the spot market, what's happening on exchanges, what's happening kind of behind the scenes from what you can tell us in regards to institutions and also just generally what's going on in the OTC market.
So, to some extent, the recent sell-off and the price dump. I mean, the bloodbath's gotten pretty severe this morning.
Mm-hmm.
When we're down to sub 5K BTC. To some extent, it surprised a lot of us in the OTC space, mainly because we see the volume continuing. Mm-hmm. In addition, you've got things like the ETF being approved in Switzerland, the back futures exchange coming out. So you've got all these factors that are likely to push the market up, sort of pending in the background, and yet the retail market's dropping off. And what sort of compounds that for us in the OTC space is that we still see continuous ongoing buys happening from largely institutional markets in the OTC space. Now, as we've discussed before on this channel, the OTC space isn't reflected in the retail market. Mm-hmm. You could have $200-300 million buys happening in the background, and none of that, and that's all the iceberg that's under the water. None of that actually gets reflected in the price market, which is to an extent unfortunate, but also the nature of the market. And so when we've got visibility on these trades that are happening, it does reflect to us that there's ongoing sort of positive market sentiment, predominantly from the institutional space, and then to see a reverse effect within the retail space. On one hand, it's surprising. On the other hand, it does lend one to, without being too much of a conspiracy theorist, wondering about the factors that lead to, if institutional players want to get into the market in a big way, it does benefit them to act in a way to have the market suppressed to a certain extent. Mm-hmm. If I'm wanting to buy $200-300 million worth of Bitcoin, I want to buy it at the lowest possible level. And this is no different from, I guess, the theories that have been put forward as to why some of the dramatic drops in Bitcoin price over this year has been in a way, or could have been in a way, perpetuated by some of the bigger players in the financial services industry. This is all completely unsubstantiated, I recognize. But often the greatest conspiracy theory is that it isn't. And if you reflect back on the way traditional financial markets have worked all along, the opacity that the OTC market affords it to an extent does make it prime for behavior such as this. So that's just one possible theory that I'm sort of putting out there, but it does sit at odds with the retail market versus the OTC market volume that we're seeing.
Mm-hmm. Yeah, I mean, that's something that I've kind of theorized for a while. I mean, as you mentioned earlier, you know, we have to both realize that when you have volume in OTC, one thing we like to think of is, oh, you know, this is taking away all the buy side pressure, but every trade has a matcher of buyers and sellers. So it's also taking a lot of the sell side demand as well. Mm-hmm. But the one thing that I am concerned about is what you mentioned as seen as kind of a conspiracy. We don't really know what's going on fully in OTC, and not to mention as well, for example, Caleb and Brown is just one of many OTC firms. It's a whole wash of private trades going on across the world. Yeah. And with that, you know, I've always thought about the fact that if you have it's just kind of like, for example, how many people have pointed to the leverage traders on BitMEX. If you can bring down the price on spot market or even bring it up, for example, and trade on margin, you can obviously make more on the leveraged exchanges. And I've always felt the same goes for OTC. If you're looking to make large purchases or enter in, like you said, in a big way, you know, entering it at a spot price of 6,000 versus 5,000 is a massive difference when you're making those multi-$100 million buy orders. The amount of Bitcoin that you can pick up is tremendous in that regard. So I'm 100% on board in the sense that even though there is no solidification, that seems to be the most rational logic to me, that there are some people who have a vested interest. Now, there is one thing to mention as well, that either they have to convince someone else to sell their Bitcoin on spot market, or they need to have held Bitcoin in the first place and sell it. So that's one thing as well, because they simply can't just sell it. They'd have to have a holdings in Bitcoin beforehand of some
Absolutely.
sort.
But if you consider this, if you've got $20-30 million worth of Bitcoin, and again, without going too far into pure hypothesis, but if you had $20-30 million worth of Bitcoin and you had a leveraged short position, and at the same time you chose to dump that $20-30 million on a couple of major exchanges, instigating a sell-off, and then buying in with that same amount, or if you had another $200 million waiting in the background, buying in once the price hit to the bottom, you still got the possibility of profiting both ways.
Exactly.
All of a sudden, it doesn't sound like a conspiracy theory anymore, but it just sounds like very clever mathematics.
Yeah, I mean,
and not all of us are able to do that because most of us don't have the capacity of, you know, that economy of scale to make that happen. But there are a lot of people who can.
Yeah, I think it's a very vulnerable factor of crypto markets at the moment when we're still in such a low volume period. And it's something I pushed a piece. I mean, obviously, I don't think they're ever going to read it, but I had put out a Medium article back a few months ago when I was traveling out in Thailand. And this was at the time where the SEC was still on the fence, and as they have been for a while, on creating a Bitcoin ETF or approving one. And I put a push in the idea that unless we get some of these institutional products coming in, unless we make easy gateways for people to engage in OTC or for an ETF to be purchased by retail and institutional investors, or unless we get back Bitcoin-based futures, if we don't get these coming into fruition, these institutional gateways to bring some sense of excitement, not to mention as well dilution of ownership of Bitcoin into other markets, what you're going to have is the same exact manipulation that we've been seeing in Bitcoin markets, really for two reasons. One, because a majority of Bitcoin will still be held by a select few individuals. And second off, if we don't have something that's going to get interest back in this market in the short term, we're going to continue to have the sharp manipulation we've seen, or I think people commonly refer to it as BART charts, where basically the price just shoots up and shoots right back down, where people are just completely abusing the market and trading on margin. It's not rocket science when you understand it, but it's at the same time, it's something that, it seems like the only real solution that's going to bring back some sense of rationality to this market.
I often talk about the need, that one of the main pushes, one of the things that will get Bitcoin into the mainstream is institutional investment. And one of the main things that will get institutional investment moving is the need for regulation, because it creates a safer marketplace for institutional investors to get in. Having said that, though, there is always this thought in the back of my mind that to an extent, perhaps regulation is most necessary to regulate the behavior of these exact institutional players. Because while on the surface, regulation is what allowed them to publicly enter the market, in the background, I often worry about the power of manipulation, exactly like you said, that the institutional players have. And rather than the the everyday investor, really where regulation is necessary is to curb the behavior of the institutional players, because history has pointed out to us time and time and again that those with the power are the ones with the most capacity to wreak havoc, and they have.
Yeah.
Almost 10 years ago today.
Yeah, no, exactly. I mean, I've been recollecting a lot when we talk about U.S. equity markets. I don't want to go too much on a tangent, but we've been definitely covering U.S. equity markets, and not only some of the growing fears that I have over U.S. equities as of 2018, but again, it is a good reminder from time to time that in the traditional financial sector, as this sector moves into cryptocurrencies, you'll find an even more riskier nature, I think, than what was seen in the retail speculative period of Bitcoin from 2016 and 2017. I think we're going to see very much what we saw back in 2008, where you have people in the financial sector who are going to be at odds with playing safe in this market and going to take risk at all costs, because most financial corporations benefit those who take absolute risk for return. I'm always reminded there was a Harvard business study, and this is like one thing that always kind of concerns me. There's a Harvard business study that stated that 10% of all individuals in the financial sector are deemed as a psychopath. Like, if you were to categorize them as psychopaths, because and honestly, you see some of these people at the heads of financial companies in the United States during 2008, and being some of the head reasons for why we had some of the faults we did with the CDOs, the absolutely risky trading with derivatives on top of the CDOs and different financial derivative-based products. I mean, it was just an absolute mess in 2008. To think that can't come to crypto, I think would be quite ignorant,
Well,
I guess.
It's a market that's perfectly set out for it, particularly with the small volume. Another thing to be aware of is, like, for a lot of us who are very deeply invested in the crypto space, both financially and emotionally, crypto doesn't necessarily form a small proportion of our investments. I know it doesn't for me. For a lot of us, it forms a larger than a small portion of our investments. For a lot of the institutional players getting into the space, particularly wealth managers and fund managers, a lot of the way this is going to be sold, at least initially, to their client base, is that crypto forms a hedge against fiat currency investments. Crypto is still a volatile instrument, but it's worthwhile having it as 2%, as 5% of your portfolio. That's the way it's going to be sold. The moment something starts to be sold as the volatile, the play money part of your portfolio, then there's automatically a license that's given to the people who are managing this money to be a lot more cowboyish with that money if it's not a safe part of your portfolio. Now, that's fine for that person's holdings, but what does that do for the rest of the market when these holdings from the institutional investment end up being a large proportion of that market?
Yeah.
Now, that's while fine for the individual, for the market itself, it tends to become very, very risky, because then half the market is playing with it like it's cowboy money.
Yeah.
And that's another factor that we have to consider, particularly with the way that crypto is being marketed at this point, and the way it's going to be probably for a few years, until we see either a greater market size, until we see a greater adoption in it, away from being purely speculative and it being actually used as a currency, actually having a use case.
Yeah, I think the general time track that I've set out for crypto, at least in my kind of analysis, is that over the next 2 years, going into 2019 and 2020, even though everyone's quite fearful right now, we are going to see, I think, another wave of rampant speculation, prices increasing. I don't know if it's going to happen in early 2019, but sometime in 2019 to 2020. And this is obviously going to come with the institutional gateways like Backed, and potentially, I think, by the time in early February or March, you'll be able to get an ETF approval. And when you have these entry points for mostly U.S. financial corporations, I think that's going to spawn a wave of speculation. And then from there on out through 2020 to 2030, I see not only the United States and developed economies, but specifically emerging markets starting to cause a drag on the global economy through a mixture of currency crises and debt crises. And this is going to open up the perfect storm for cryptocurrency to actually be used as a currency class. And we're already starting to see this in Venezuela with currencies like Dash. And I'm getting really interested by the actual rapid merchant adoption that they've gotten and how they're planning to expand into other different countries. And I'm not even a really big fan of Dash, but they've actually proved for the first time that people can use cryptocurrency, and when things get bad enough, that people of a given nation will make the switch if their underlying currency can't store value or can't be used in everyday commerce.
The problem is that with that example, yes, Venezuela is an ideal example, at least as a use case. But there's a significant myopia from the developed world, which goes along the lines of like, oh yes, but that's in Venezuela.
Mm-hmm.
There's this myopia that will never happen to us. We live in a first world, developed economy with no corruption, a stable economy, a stable government, and that will never happen to us. Why do we need to ever consider that possibility? We're never going to have a dictator. And until that myopia shifts, or until that same sort of adoption happens in a country with a more relatable system than Venezuela, then I think those in power, those in, at least in developed world power, are going to struggle to quite see that relation quite as yet. That's sort of, I guess, basic relational psychology.
Yeah, I agree. I think Venezuela is an example of an emerging market, or like one of the smaller emerging market economies that might start getting others on board in different countries, but you're not going to probably see it anytime soon in the euro. You're not going to see it in developed economies like Canada and Australia, and not in the United States. I think honestly, you're going to see the euro, the dollar be one of the last currencies out, but it's going to take time. That's one thing I've tried to tell people. As much as I have this vision, I think it's eventually going to be a domino effect, but it's not going to be sharp like 2008. You have a long periodic decline of trust in traditional fiat systems, depending on central bank policy, depending on the specific debt crises that these economies find themselves in. And eventually you kind of work your way through it and people start to get the picture, but it's not going to be something that just happens like that, I think, overnight. Switching from an entirely separate currency network is something completely, it's game changing. It's trillions of dollars of wealth being transferred into a new class of currency. So I don't think that happens overnight. Yeah. So I was curious to ask you, Prash, we've talked about kind of the long-term picture of crypto and everything, and also kind of some of the institutional interest. I'm really curious to ask you about something, because you are working in the OTC space, and OTC deals with a large amount of crypto. And this has been a big concern when it comes to institutions, and that is custody. So in regards to custody, I've been doing a little bit of research on my end. And even though I know about some of the solutions, I'd really love to ask you if there's been any revolutionary kind of products coming through, or some interesting products in the space for custodial solutions that you guys are looking forward to.
Custody will be the game changer. In a lot of ways, or if not the game changer, it will be the lock that really solidifies crypto's capacity to move into the mainstream, because obviously that's the big risk at the moment. We've been looking into a number of different solutions. We ourselves offer a custodial service. I will differentiate between a custodial service and a custodial solution. We offer a custodial service in that we offer the capacity for certain clients, particularly high value clients, to store some of their crypto with us, and that's in a secure storage facility. I like to differentiate between a custodial service and a solution in that, and for me, the main difference between the two is underwriting. There are plenty of companies, plenty of ways you can establish a custodial service via secure vault storage, via multi-sig wallets, via sharded private keys. But there's still a custodial service. For you to really be able to state outright that it's a custodial solution, you need to have a backing, a basis for what happens if something goes wrong. Despite however secure you want to make this service, what happens if something goes wrong? And if it isn't underwritten, then it's just a service. It's not really a solution, because you don't have that fallback. And as of yet, I've heard some rumblings about a major underwriter in the UK, and this is purely rumblings, and I can't say any more, being apparently willing to take on the task of underwriting. And some of the major custodial services like Coinbase, Custody, BitGo, for example, have been claiming to have certain underwritings in place. From what I've read of it so far, my understanding, and still I don't know this to the nth degree, my understanding is still that the underwriting covers the device, covers a certain extent of security, but it's still very hard to prove, I guess, to that last second, what was exactly in that wallet, what was exactly being controlled by that private key, which continues to be the main issue with custody in the crypto space. So that's got to be the shadow behind any custodial solution, that until we've worked out a way for effective real-time underwriting of these assets, to call something a pure custodial solution is going to be hard.
Interesting.
Within those limitations, yes, Coinbase Custody and BitGo are two of the main players offering custodial solutions. They are limited, or rather users are often limited by the fact that they're usually quite high, either fees or minimum investments to make it financially viable. So for someone like us, for a brokerage like us, or for an exchange, for example, that sort of makes sense. But for individuals, that can be a bit limiting. An interesting conversation I had recently, I was at Cybos, which is sort of the biggest banking conference in the world. It was held in Sydney, and I met Joe Lubin there and his Consensus group. And one of the companies that Consensus have incubated called Trustology. And what they're seeking to provide is a custodial, I'm still calling it a service at this point, but quite a different model rather than a very static model, which most of the other custody services offer. Their model offers a more mobile custodial service where using, and I'm going to do a terrible job, I'm going to butcher this whole explanation, but almost by integrating with mobile phone technology and sort of facial recognition technology to form a 2FA or a 3FA type mechanism that allows you to then gain access to a separate platform, which then allows you to gain access to your private keys. There are a few layers of security and a few different both digital and analog layers of authentication to get to access your private keys. It does make it a much less cumbersome solution because it's actually mobile. It doesn't require you to have a certain degree of separation in terms of accessing your keys, which I thought was a quite interesting solution, and I thought would be something that we've been thinking about in terms of having a dual-pronged custody service, a more static solution for a large part of the assets and a more mobile solution for a smaller, more tradable selection of the assets.
Yeah.
That's really some of the big things that I have, on my mind. Yesterday I read something about a Dutch bank, and I can't remember who they are right now, who are apparently offering what they call digital vault technology or digital vault services. Again, now I'm wishing I'd read that article better. It's sort of bookmark on my reading list, which is about 120 articles long. But I'll get to that, and I'll tell you tomorrow, Nick.
Awesome. Yeah, I mean, no, to what you were talking about with the mobile phone solution, I had heard about a company called, I think it's Vault 8 or like Vault something. Basically, they had a very similar solution that was based off, I think generally multi-sig approval, like where multiple parties would hold custody over funds. I don't know if they had facial recognition, but that's an interesting kind of third factor authentication. But yeah, I mean, I think it's about adding extra layers of security, just like how two-factor kind of revolutionized security over managing passwords. Finding those layers where people can only get access to some form of authentication through something like their smartphone or something that's more private and more secure. So I'm definitely interested to see some of the custody solutions. It's going to be really interesting to not only see, like you mentioned, the underwriting and stuff for some of the larger holdings, but also just the solutions that come for that. But I think for retail consumers, we're going to learn that it's not too difficult. There will be ways to smoothen out the process on mobile wallets and make it much more easier to where not everyone needs some clunky hardware wallet in the long term. Yeah. So I'm curious, one thing, sorry, you want to make a point on that?
No, it's all right. You keep going.
I was just going to ask you, Prash, because, I kind of make the same kind of false, I would say probably false stereotype that most people do when it comes to OTC. And when it comes to OTC, a lot of people picture institutional investors. One thing I wanted to kind of talk to you about is in this market where we've started to enter into kind of a bear market over the past few months, obviously OTC has been seeing the same amount, if not more, in volume over the past few months. I'm curious to ask you, how much of those are what you would determine as retail investors? Because it's not some exclusive club. Anyone can really partake in OTC, correct?
Absolutely. The term OTC has been taken over by the crypto market to mean exactly that, mainly because if you think about when it originated from, there were only two services available. It was either you were trading on exchanges or we were using OTC desks, and OTC desks tend to be high touch, high fees, and were primarily reserved for the high net worth or institutional investor who was buying really large amounts. We've seen more intermediary players come into play, and I say we have seen because we're one of them. and we acting as a cryptocurrency brokerage, but working in the OTC space allows us to deliver to our customers sort of an OTC model, so buying large volumes at a spot price instantly, which is what the OTC market allows for, but for values starting from as low as $5,000 to $10,000, and trending all the way up. The fact that this should not be, well, the fact this should be the way more people get into the market, for me, makes a lot of sense. Primarily because then you take a bit of power away from the exchanges, for one thing, but also, why should you incur slippage when you don't have to? Once you hit a certain threshold, and that's changed over the years, and when you first got into the market, trying to buy $20,000, $30,000 on an exchange would incur enough slippage to not even make it worthwhile, so that you're doing it $2,000 at a time every day. Now you're adding a zero onto that. But even then, slippage is largely unnecessary. Unless you're looking to trade, unless you're looking to be an active trader, then the exchanges provide for an excellent platform for that. But if you're looking to acquire to hold, then slippage is unnecessary. And with more players such as us in there, providing that intermediary layer, such that we take on the task of being able to access the large liquidity pools and providers that allow us to procure the coins via the OTC market, and then return that sort of benefit to the investor. There's no reason why that should not be accessible to just about everyone apart from the day traders.
Yeah, I mean, if you were to talk about Bitcoin or Ethereum, I think an average retail investor wouldn't experience too much slippage. But when you talk about the countless list of other altcoins out there that are even some who are listed on Binance that are trading between their Tether pair and their Bitcoin pair and their ETH pair and whatever what pairs Binance offers, you can still experience slippage. I've seen it myself. I'm no whale by any means. I don't have a lot of cryptocurrency compared with most people, but I've seen like how I can clear through some of the order book if I just want to fill a market order. If I want to be a taker on the order book, in that case, I've seen sometimes how it actually can move price. And it's concerning how we're at a point like right now where we're seeing this massive sell side, and if someone wants to exit a position, even if they're a trader or a long-term investor, that's a very scary situation when you can easily clear through the order book and get nowhere near the value that you thought you originally had.
Absolutely. And it's perhaps even more of an issue for people who are trying to liquidate their position than people who are trying to buy. People trying to enter the market for a particular position, there's often a lot more patience. And if you're looking at a more obscure coin or something with lower liquidity, you're often willing to wait and take your time through it. But there are often people who want to exit the market for various reasons, often personal reasons, who need that liquidity soon, even if it's to invest in something else. And trying to do that 10% of the time over 10 days can be painful, can be frustrating, and then there's the opportunity cost of not being able to use that funds elsewhere. And in that case, paying a small commission to a brokerage that allows you to do that OTC right away makes a lot of sense, because that opportunity cost is eradicated.
Are the fees generally, I mean, I don't mean to just ask specifically about Caleb and Brown, but generally with like OTC, and maybe in the case of Caleb and Brown, do the fees match relatively on par with exchanges, or do you guys outpace and stay competitive with exchanges for the most part?
It's very much volume dependent. I'd say if you're looking at small volumes, the fees are probably slightly higher than exchanges, but you're paying for the convenience of having someone take the entire process off your hands. But when you're getting into slightly larger volumes, then the fees are definitely either exactly the same, competitive, or better than doing it on an exchange, because you're not incurring that the slippage that can get quite extreme when you're going up to larger volumes. So again, it's very much volume dependent, but it's also always a volume to cost to convenience factor that needs to be factored in.
Yeah, I mean, when we're talking about these benefits of slippage going into 2019, hopefully, I think this is what we all imagine, is that we're going to hopefully see some institutional interest, that we might see positive price action going into the next year. What do you believe OTC is? How do you believe OTC is going to play a role going into 2019? Do you think the market itself is going to expand, or do you think it's going to contract? Generally speaking, I understand you guys are obviously working towards Caleb and Brown, so I'm assuming that you would hope it's expanding. But do you believe that it's going to help kind of strip away some of the control of traditional exchanges like Binance and Coinbase that have gotten such a good grip on the space amongst retail investors?
the first thing to well, the first thing to think about is that I think the first wave of institutional investment that will come in, that will enlarge the overall crypto market size, is not going to be into some of the smaller liquidity coins. The large bulk of it is going to larger coins, predominantly into Bitcoin. In that way, the exchanges are still going to have a very relevant role in terms of trading some of the smaller liquidity coins. So at least for the other coins, I don't think there's going to be a diminishing value for the exchanges. When it comes to something like Bitcoin specifically, let's say, I do think as the institutional market grows, there will be a reduced knowledge gap. A lot of the times, one of the reasons why OTC desks exist is because institutional players trying to come into the place, there's a huge knowledge gap. They have no idea how to get in and out of the market, and so the OTC market exists, or OTC players exist to help facilitate that. As the greater institutional players come in, they'll be able to take that on themselves. I imagine Goldman having their own OTC desk. I imagine JP Morgan having their own OTC desk. Fidelity has already announced that they're starting their own crypto division, and I imagine they will have their own OTC desk. I also think that will pull a lot of the BTC power, buying power, trading power away from the exchanges and onto these individual institutional trading desks. And to an extent, it will pull it away from us as well. Because as that knowledge gap diminishes, we won't be as necessary, at least for the Bitcoin market, to act as that intermediary. It's kind of why we're constantly adapting to the wealth management side of things, to offering that expertise within the cryptocurrency market in terms of market analysis, in terms of ancillary services to our client population, and away from that pure fiat to Bitcoin exchange as being our primary revenue model or business model, because I think that's where we'll be able to add the bulk of the value to our clients, as our clients find that they're able to do a lot of that direct buying themselves, or as institutions are able to do it for them. So our value proposition will shift.
Yeah, I'm curious. So in that case, you know, I really appreciate your opinion as well, and staying on your feet about how the markets will adapt and how exchanges will shift in regards to power they hold. So to your comment, I think what I've kind of realized about OTC is that OTC really dominates generally a lot of the kind of offshore world that's actually kind of gotten a piece of crypto. I would say generally the hedge funds, the family funds, who have obviously had much more liberty in regards to how they spend their money or how they invest their money. And they can obviously invest into markets that average retail investors can't. I feel that people always kind of bulk institutions into one big pile. And when they talk about institutional finance, So I think that what this is actually going to bring is it's going to bring a whole new band of financial players into the ballpark. And this is really going to be the investment banks. This is going to be large pension funds that obviously could see, for example, a 1% or 2%, as you mentioned earlier, exposure to crypto, right? It's that kind of high risk or hedge position like gold or silver would be comparative to bonds and stocks and ETFs and all types of traditional products. Yeah. So, I mean, that's one thing I think you're going to see is hopefully the institutions coming in as a new player in that case. And, you know, I wonder, you know, are we going to see that kind of offshore world migrate to that market as well, as you were talking about kind of changing your business model? Do you think that the offshore world is going to kind of move to that? Or are they going to stay kind of more on OTC, seeing as that kind of provides more liberty in that case?
I don't think the offshore market, even the traditional financial world, has really changed too much over the years. They exist in the way they do because of the freedoms that it affords them. So I don't see that model changing all too much. But then again, it's not necessarily a world I understand all too much, or you shouldn't comment on it. But from my limited understanding of it, or my limited visibility of it, that freedom is something that they hold on to so strongly that it makes sense that they would do everything they can to sort of perpetuate that. Something like things like the release of the Panama Papers, for example, and whether sort of future events such as that, what that will do for that freedom, for that capacity for confidentiality, that will be interesting to see. But as it stands, I don't think there's been enough to disrupt that status quo that has maintained that offshore position as still being a golden haven.
Yeah, and I've been talking about that for a while. I remember when the Panama Papers came out, and there's another actual leak that came out as well. I can't think of the name right now, but I mean, people I think don't understand the massive scale that the offshore world holds. Even if we don't get, for example, institutional adoption in 2019 and 2020, I think obviously it's going to come this upcoming year, but. Outside of that, I mean, the offshore world is estimated. There's only been one serious official study on the analysis of the offshore world, and it's quite a wide range if you really listen to the numbers. But they estimated that it's anywhere between 21 and 32 trillion dollars worth of wealth. That was recorded. That was recorded back a few years ago, and I mean, I wouldn't have any doubt that it stayed around the same, if not grown. And it will be interesting to see if there's some political change in regards to a global scale on the offshore world, and if those freedoms start to get kind of alleviated. Again, some people see pros and cons to it, but I'm more than anything just interested to see if that's going to change and what that'll mean for crypto and other markets.
The offshore world definitely recognized that crypto is going to be a large part of their future. So New York. What's the big conference in New York?
Consensus.
Consensus in New York. So I was there in New York in May this year, and one of the main sponsors was the nation of Bermuda, and which fascinated me in itself. Like, how often does a country sponsor a conference? But they were everywhere, and there were I think it was the finance minister of Bermuda or the foreign minister of Bermuda who delivered one of the keynote addresses. Their branding was absolutely everywhere. I was getting text messages from the foreign minister of Bermuda. I was getting spammed by one of the ministers of Bermuda, which was
that's something you can tell. That's something you can tell at a dinner party.
I had to do this double take of like, is this for real? But that was the extent to which they were pushing their services out to the crypto industry in general. But for me, that always just kept relating back to like, well, this is the offshore world, and they see the potential that perhaps Wall Street didn't at that point overtly see. I say overtly because I'm sure behind closed doors they did, but they didn't have the capacity to be that overt about it. But the offshore world, yeah, they can be overt about anything they like.
Yeah, I mean, you can obviously see with the majority of exchanges, not only with Binance moving to Malta. I know, for example, I'm trying to think of the location right now, but I'm very aware that BitMEX and a variety of crypto exchanges are based in offshore islands and nations across the world. So it will be interesting to see if that continues to expand. I think that they have to continuously make businesses around financial markets, and they're not going to miss out on cryptocurrencies as they surely haven't over the past few years. But it'll be interesting to see if they continue to grow demand in OTC. I wish the best of luck in regards to what you guys are doing at Caleb and Brown. I hope you guys not only continue to grow in what you're doing now, but hopefully you can pivot and touch to new markets. I was fortunate enough to meet you guys when I came and visited back in Australia in February. Hope to make it back as well to Australia. Thank you. Yeah,
absolutely.
I know, like I think we mentioned before the call, I'm hoping to make it there in Sydney, but would love to visit back to Melbourne. That was definitely one of my favorite parts of the trip on the world tour back in February. So, Prash, thank you again for making the time. It's been an honor. Congrats again on your award, and also thank you so much for taking the time to talk about OTC markets.
My absolute pleasure. We'll talk anytime.
And that's going to be it for this episode of the DashCast. Thanks so much everyone for tuning into this episode, and if you liked it, please share it with some family and friends, as well as leaving a comment down below if you can think about who you'd like to see on the next episode. Outside of that, I'd like to give a quick shout out again to Dr. Prash for coming back on to the Data Dash channel. It was really interesting to get some perspective from the OTC space, especially seeing as all of us in the retail space tend to only see what's happening on the spot market. It seems that there's still a decent amount of institutional interest. Outside of that as well, I want to go ahead and give another shout out again that our sponsor for the podcast is none other than our new newsletter, the Dash Report. Again, if you guys want to get another perspective or more in-depth perspective on a variety of different markets, not just crypto, I think it's a great way for you guys to get some in-depth perspective on what I'm currently analyzing in markets that I don't get to cover even in my 30-minute videos here on the Data Dash channel. So if you guys are interested, the link is down below.